Hello and welcome to Earnings Echo. We put together the most important information about Aurubis AG.
We're looking at the Q1 numbers for the 2025-26 fiscal year. They just came out today, February 5th, 2026.
Right. And there's a real divergence in the headline numbers. Revenue is up, and it's up significantly, but profitability seems to have taken a hit. Can you walk us through the hard facts?
Sure. So revenue surged 25% year over year to $5.28 billion. That was mostly driven by high metal prices, as you'd expect.
Okay, but the profit?
That's the story. Operating EBT, it actually fell 19% to $105 million. That's down from $130 million last year.
And I assume EPS followed.
It did drop to 1.86 from 2.26, but, and this is the interesting part, they raised their full-year guidance for operating EBT.
But that guidance hike was pre-announced back on January 28th, wasn't it? So the market already knew about it.
Exactly. It was priced in, which is why the stock reaction today was so, well, severe.
It dropped over 6% intraday. I saw it trading between 148 and 161. So besides the classic sell the news effect on the guidance, what else was behind that drop?
It's a mix. You had falling copper prices today, for one, and then just general profit-taking after the stock had a pretty good run. The market is definitely focused on the immediate margin pressure, not that top-line growth.
Let's focus on that margin pressure then. Because revenue up 25% and EBT down 19%, that's a huge disconnect. What are the specific operational drivers really eating into those margins?
The main culprit is a collapse in treatment and refining charges, the TCRCs.
Right.
There's a global deficit in copper concentrate, so the margins for smelting have just been squeezed. Aurubis actually pushed more volume through 630,000 tons, but they're getting paid much less for it.
On top of that, I see higher costs from their big projects.
Yes, higher depreciation and costs tied to the strategic projects in Richmond and Hamburg are also weighing things down.
So with processing fees down, what stopped the earnings from falling even further?
The metal result, it really saved the day here. High market prices for gold, silver, and copper gave them a very strong tailwind. Without that, the drop in EBT would have been much worse.
Okay, can you break down the segment performance for us? The multi-metal recycling segment, MMR, it looks like it's really underperforming.
It is. MMR operating EBT dropped to $18 million from $28 million. And the return on capital employed in that segment, it just plummeted to 0.4%.
Wow.
That's pretty much all down to ramp-up costs and just a lot of capital tied up in the Richmond expansion. Custom smelting and products also fell to $113 million in EBT, and that was hit directly by those lower TCRCs.
And what about the cash flow situation? It looks strained. Free cash flow swung to a negative $103 million.
Yeah, that's a big swing from a positive $39 million last year.
Is that just a working capital issue or something more?
It's twofold. First, the high metal prices inflate inventory values, which ties up cash. And second, the investment cycle is still very heavy. They put $108 million into CapEx this quarter alone.
So moving on to the call, what was the sentiment? Management is really pushing this Performance 2030 story. How credible is that shift from investment to actually realizing returns?
They tried to be very specific with the timeline, I think, to reassure investors. They said, Aurubis Richmond Phase 1 is in hot commissioning right now.
And Phase 2?
Phase 2 is slated for summer 2026. And the Hamburg project that's supposed to be commissioning in the first half of this fiscal year, the whole tone was, look, the heavy spending phase is ending.
They keep talking about the decade of metals, AI and electrification, but at the same time, they're flagging this raw material deficit. How does management square that circle? High demand, but tight supply.
Well, they do acknowledge the risk. The disconnect is clear, right? The downstream demand for the actual metal is booming because of the green transition, data centers, all of it.
But they can't get enough concentrate.
Exactly. That upstream availability is tight, and it's the real bottleneck for margins in the short term, no matter how good the long-term demand story is.
So if you had to summarize the investment story coming out of these results, what would it be?
I'd say the core narrative is about a company at a pivot point. The echo to take away here is that Aurubis is moving past peak CapEx. The focus is now shifting, and it's shifting entirely to execution.
So the big question for investors is,
can the new capacity from Richmond and Hamburg actually generate enough return to offset this structural pressure from the tight concentrate market? That's the whole game now.
execution is the key metric for 2026.
Got it.
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.